and pretty impressive showing overall by buyers in this market. Again, this is a crazy whipsawish market that's been going on here, and to say the least. And buyers came in and defended early morning weakness after yesterday's trend day up territory. So definitely seeing some nice headwinds being made after what was a really aggressive multi-week sell-off in May there. So right now we have the Dow up 166, chopping around these afternoon highs for the most part. The NASDAQ is up 30. That's not, it never took out the initial morning range opening highs there. It did recoup most of the session there back above first hour range lows, but it's been really consolidating mid-range here for the better part of the last 2 hours or so. So it makes it somewhat of a laggard. The S&P, on the other hand, that has been consolidating the last couple hours above the initial morning range highs. So that's some pretty strong price action there as buyers stepped in to defend the 2,800 level early this morning. MDY mid-caps, also nice recuperation. Almost got all of the early morning selling range that took hold there into midday, but also did not take out that opening range high. So a little bit of laggardness going on there. And then, believe it or not, small caps IWM, similar story there. Nice recovery effort there throughout the midday, but they're actually looking like they're rolling back down a little bit off those midday highs there. They've been lagging the market for quite some time, and then just today's price action just shows that these smaller cap, more speculative asset groups are not in vogue here for the market these days. It's a very risk-off type of scenario. Looking through some of the major FANG stocks, let's take a look over at Amazon. Choppy sideways action, reflective, very similar to what we see in the NASDAQ. Ditto on Apple. Apple's actually in a really tight consolidation range after gapping over 4 points higher today. It's pulled back in a little bit. It's been in this narrow range for about 3 hours now, let's go with, right in between that 182 and 182.50 area. So some unusual activity for a very high-priced volatile name. So you might see some sort of action in that stock if you're looking for a day trade this afternoon. Usually these contractions of volatility will lead to an expansion of volatility. So keep an eye on Apple for potential signals. Google, G-O-O-G, that's really choppy. That's just all over the map today. Straight down, lost about 20 points off the initial opening dive, and then it recouped it's about 75% of that, and then it came back in a little bit. This one's just it's got some issues here this week, obviously with that gap down on Monday, and it's still trading around inside of these ranges from the last two sessions. So it's pretty much an avoid for me right now. I don't have too much an opinion, long or short, on Google. We swing over to Netflix. Netflix, you know, I'd say this one almost led the charge yesterday on the rally. It was trading up $11, $12, $14 at one point. It's got some decent follow-through today, holding on to those gains, but not really making any sort of headwinds above the late May resistance levels and the 50-day moving averages at that 355 to 360 area. So that's definitely a resistance zone I'm keeping watch on. Move over to Facebook, and although it did find support the last two sessions off that 160 support, it's not making much upside headwinds as I'm sure buyers would like to see. So another one that's just consolidating sideways, not much going on there. And then NVIDIA, which had a monster rally yesterday, but you know, taking context where it's come from, it's been beaten down significantly for about 6 weeks in a row off those highs back from April around 190. The stock was just overdue for some sort of reprieve in the selling pressure that would have let it go up 5 to 10 points. Opened higher today, and that was just a gift for anybody who was overnight long any sort of balance from yesterday, that they can just sell into that additional morning gains for carrying the risk overnight. And at the same time, it was a gift for anybody that's been that's a trend trader and knows how weak this stock is and how weak the sector has been, for them to just jump on board at a higher price. So win-win scenario there, unless of course you're chasing price action higher on headlines, which is always a no-no. But yeah, that one's coming back in a little bit on some profit taking as well. So those are your basic FANG stocks that are going out there moving the market and whatnot. CRM, Salesforce, had that earnings report. Positive response, up about 5% in reaction to that, negating the breakdown that happened on Monday, and still battling against that resistance from late May in the 50-day moving averages in that 156 to 158 zone. So not a whole lot to do there right now at this point in time. It's one of these ones where I want to see what the next move is, whether buyers are going to step in and clear this above 160, or whether sellers are just going to continue to lean and press. And I think this is going to be, given it's a pretty big heavyweight in the software space, it's probably going to be pretty indicative of what the rest of the group is going to do. And they all seem to have some somewhat similar price structure going on there. There are a few exceptions. Shopify, SHOP. I have lines drawn all over my chart for SHOP, going back to February of this year when it started breaking out above its 2008 highs, and I haven't traded it. I think I traded it once since then, and I'm really beating myself up. Well, I shouldn't say that. I'm not beating myself up, but I could easily beat myself up for not getting more involved in such a strong trending type of software leader. The Shopify is truly a leader in this field, and just doing phenomenal. And here it is, all-time new highs, up $18, just phenomenal action there. You can throw Viva in there too, VEEV. Okta's doing pretty well here these days as well, OKTA. It's one of the reasons why I went after Zscaler this morning. Obviously, I got some resistance to deal with from May in the ZS long, but I like the pattern, I like the structure. It's a leading name, and I took a third size position because I knew buying into this morning's strength was just going to be chasing, moves after a one-day rally. So there was obviously going to be this profit taking and the pullback action. So I'm just sitting tight with it. Right now we have a two-day series of higher highs and higher lows in play there. So it could be the potential change in momentum off that recent swing bottom off the 50-day moving averages. So Zscaler being a strong growth name, it has potential still to move higher if the market wants to do so. Again, like I said earlier, as I said in late May, I really wanted to get back more involved in trading a lot of these software names. I was trading them a lot in Q1 because they had such strong uptrends, and I kind of backed off it with the market during April and May, and there were just so many opportunities to buy dips amongst so many leaders in this space, and I was missing out on a lot of just simple ones because I was too focused on semiconductors collapsing and energy stocks breaking down, and other names, Chinese names getting hit, and all the headline news was taken away from just the easy and the easy, clean setups that were there to take on the long side. Based upon the strong relative strength on a lot of these software names. So again, a lot of them are on liquid momentum focus list. A lot of them are on the emerging growth focus list. I have the lines on my charts. I have the alerts set, and just failed to pull the trigger on them because I was focusing too much on headlines. But I'm starting to make my way back into them because they are such strong performers. Workday, WDAY, that's a name I picked up yesterday on that reversal from the 190 level, and that paid off real nice here today for about a 7-point gain as it jumped back up towards the 200 mark in the 50-day moving averages. So that's the kind of trades I'm looking for. It's a really good space that seems to continuously find bids. So I need to keep my focus and most of my trades going forward here on this software space. Coupa Software, that's another one, COUP. Earnings yesterday bounced off the 50-day moving average the last two sessions and now breaking out up towards new highs. NOW, another leading name, ServiceNow, tried to break down below the 50-day moving average, and here we are with a recuperation of that. So another one to keep on the radar there, NOW, as a leader in that space. Yeah, I think I made my point on this one. There's just too many out there that look good. Paycom, another one, PAYC. Beautiful test of the 50-day moving average. May lows 2 days ago, and now it's right back up towards its all-time highs. Upload Software, UPLD, is a leading growth name. Got to keep that one on the radar. PayPal has been on the liquid momentum focus list for about a couple months now. That's another good-looking chart there. So definitely a handful of names that I really want to spend more of my time going forward here until those trends are clearly broken to the downside and they start rolling over, because it's just too much strength going on there, and those are going to be your easiest trades out there. TTD, let's take a look at that one. Oh yeah, there's another one. Look at that. So TTD's up $8 today. Notched that May high. So again, the space is hot. There's no denying that, and that's what you want to trade. On a shorter term basis, you always want to focus on what's hot, and software is undeniably, anything from that liquid momentum and that GrowX list with strong fundamentals, strong leadership quality, strong relative strength. Those are going to be your best candidates to always go after and trade, particularly on the long side. So. That's pretty much it in a nutshell. I don't have too much more to say here. We all know crude's been breaking down here. We did get a little bit of a bounce going into midday, but there's not much going on here. It's rolling a little bit back over this afternoon. As I stated earlier, the burden of proof is on buyers in the energy complex. And by that I mean there's significant downtrends in play, and until those downtrends are decisively broken and we see price action getting back above its 20-day moving average for starters, these things are just going to continue to slide and give way to the downside. Perhaps a key indicator would be Oxy. Check out OXY. If you're looking at a chart of Oxy and you're telling yourself you need to be long this stock, I don't know, as my dad used to tell me, I need to have my head examined. So he was a pretty blunt guy. So yeah, that stock is going straight down, and the energy complex, until it turns around, then I'm pretty much going to try to ride those trends out for as best as possible. Yeah, so that's that. So Gavin's going to probably be jumping on here in about 10 minutes to give us a macro view, what to expect, probably highlight some of that beige book that came out there here this afternoon, give us his thoughts on that, and then focus on some of the upcoming economic and job data that we should be watching out for at the end of this week. And then I'll jump back on and discuss a few of those potential earnings movers that we can keep our eyes on after the close as well as tomorrow.